start the broadcast now so you can show your screen.
The broadcast is now starting. All attendees are in listen-only mode.
Welcome everyone to today's webinar, Leveraging Excel-Based Analytics in Your Audit and SOX Testing of Revenue to Cash Cycle. My name is Jim Kaplan. We'll be starting in just about a minute as we wait for last-minute attendees to sign in, so please stand by. Well, it looks like just about everybody is signed in, so we will go ahead and we will start the webinar now. Welcome everyone to today's webinar, Leveraging Excel-Based Analytics in Your Audit and SOX Testing of Revenue to Cash Cycle. My name is Jim Kaplan. I'm founder of AuditNet. With us today is my colleague and friend, Rich Lanza, an audit software expert. This webinar represents a collaboration between AuditNet and AuditSoftware.net in delivering training series focusing on audit software. We're glad you could join us. I'll be moderating today's webinar. A little bit about myself for those of you who don't know me. I'm the founder of AuditNet with a background as a chief audit executive, Internet for Auditors pioneer, and an auditor who believes and promotes the use of technology for audit. The next slide provides some information about AuditNet. Before we proceed to today's material and introducing our presenter, Rich Lanza, I'd like to go through a few housekeeping points. You received the slides this morning, so you should have this information. I'm not going to read it from the slide, but basically we are recording the webinar, and you will receive a copy of the link, and that should go out tomorrow. We are operating under NASBA rules, so we are required to ask polling questions during the webinar, and CPE certificates will be sent via email to those who answer all of the polling questions. If you're joining us from a tablet device today, you may not be able to respond, in which case you can just send the responses to the polling questions to either Rich or myself, and we will get them recorded in our records, and you will get your CPE certificates. You can submit questions via the chat box. I'll be moderating those questions, so submit them, and we'll try to address them during the polling questions when we break for the polling questions, and Rich will be receiving notices for those questions as they come in as well. After the webinar is over, you will have an opportunity to provide feedback. Just complete the feedback questionnaire to help us improve our webinars. The next slide provides disclaimer information. I'm not going to go through that. That was in the slides this morning. So what I'd like to do right now is turn the floor over to Rich to introduce today's topic and the objectives and give you a little background about himself. Rich?
Yeah, no, thanks, Jim, and thanks everyone for coming today. Rich Lanza here. Been doing a lot of revenue auditing, especially in the last few years. It's something where I'm finding we're doing a lot more pricing analysis and determining whether or not we're selling, maybe to people in a preferred fashion and looking for, discounts and maybe even some fraud, as part of that. And that's what we're going to talk about today. I mean, some of the things we'll talk about today in this. But again, it's something where revenue, I find, is something of an area that hasn't been an area that we've all looked at as much from an analytic perspective. Accounts payable, a few others are top areas there, but I do find recently it's become hot, and I just think, if you're doing any sort of external auditing, especially or financial statement auditing, that revenue auditing kind of jumps into that very, very quickly. So hopefully the analytics today will help, from an internal audit, a fraud, and an external audit perspective. We have a bunch of data files that are available. This is the link that you can get the data files from. The data files come in a bit of they come with a Word document, so you can see what is available to you. and this is the index of that Word document. So let me just kind of walk you through this. So we're going to talk about really the first couple of items, this test reports and data, sample audit program, and matrix of indicators first. We're going to talk about those. They're more general type documents, kind of audit program type documents. And then the main document we'll work with, or table we'll work with, is this revenue data.xlsx, which is a data file that will really focus in on the different types of trending in revenue areas and other specific reports you can run. And we're going to show you how to do all that in Excel. I also have a little Adobe document here explaining a more difficult concept called scatter graphing, which we'll talk about as well. Did want to show you the data file, note the data files. We'll also note that the video from this presentation will be made available in a few days, but you don't get CP for watching that. And as to the agenda for today, I wanted to focus on running as many reports as we can. Hopefully, I think we'll get over 20 for sure, types of reports that you can run. And the key, though, is to map that back to an audit program so you could see how we're auditing revenue, kind of look at those top areas. I like to start out with financial statement ratio testing, and why I want to talk about that. It's probably more of like a general ledger kind of thing to do, but I do feel that it's an area that I think you can expand upon, especially in revenue, because it just seems as though a lot of the matrices and indicators around revenue is an area that in financial statement auditing is a big topic. We'll talk about some of the accounting systems and getting data, and some of the tables that you'll need to obtain, and more in a general sense, some of the tables. But I will try to talk to how you'd find that, let's say, in SAP or Oracle. We'll then talk about looking at doing a lot of trending of the data, which I think is a great way to find things beyond kind of the normal audit reports that we're used to looking for, such as maybe sales that are happening at quarter end, and right at quarter end you have like this massive sales being posted. While that is key, I think the trending of that you could find. I mean, you could almost look at daily sales or sales by week, and look at the week in the month and realize that, wait a second, this is something where every fourth week of the month we have massive sales entries being made. So we'll talk about the trending of that as well. So into the presentation here, I wanted to kind of go back to audit programs and how do we line up to audit programs the different types of analytics. So let me further first start off by going through some of the areas that we should be focusing on from a fraud point of view and from an audit point of view. So, as I said, the revenue receivables area, as of the last AuditNet survey, I know where Jim has, or AuditNet has, a new data analytic software survey happening right now, and we'll talk about that. But with that said, the last one done a few years ago found that revenue was I think the third or fourth top area of review, but it wasn't a top area. I mean, I find payables and general ledgers where people spend a lot of their time, with revenue being kind of another item. When you look at all the different types of frauds that are possible, and think about some of the kind of revenue aspects of that, let me go to this next slide. So this is everything per the ACFE. But if we go to where I think most of the fraud is happening in the revenue area, I think it's more in the financial statement area, where people are playing games with the revenue, and also from a misappropriation of asset point of view, in skimming or doing other types of means of getting the money out, like refunding a customer for a product that came back, but that customer doesn't really exist and the product doesn't really exist. It's really just a refund transaction that a person is putting into their pocket. That's skimming in many ways. A lot of other skimmings I think are where you're taking a sale prior to the event, and that is something else that I think you can find through trending, but it's kind of hard to find it because, in a lot of ways, if the sale isn't entered in the data, it's tough to find, so you have to find it more in what the data is not telling you, or, what is not in there. So, in looking at all the different types of frauds that are happening and kind of looking at their frequency, you see where registered disbursements skimming is happening at at that level. This is misappropriation of asset schemes. The financial statement schemes happen kind of rarely. I mean, when you look at the number of frauds and what's happening, it's mostly misappropriation. There's corruption, and I think we should think about corruption and selling, by the way, which a lot of people don't think about. But corruption, is another area, and then financial statement concerns, which is yet another concern that's not on this graph. Corruption and financial statement is outside of this graph, but just looking at skimming and looking at registered disbursements themselves, they're relatively lower on the scale, even from a size point of view, in relation to other frauds, and why people jump to billing for vendor billing fraud and expense reimbursements and things of that nature, because they tend to have a larger dollar size when you find them. And as you can see here, there's also just more of a frequency of it occurring. The registered disbursements are, again, it's probably mostly only retail that has that situation. So it's a small segment of the companies. And it's, again, like 2.8% versus billing fraud, which is 22%, almost 10 times the size. So understandably, revenue hasn't gotten as much focus. As you look across registered disbursements and skimming from a departmental point of view, you can see where sales, accounting, and operations tend to hold a lot of that area. From a corruption point of view, it can even get into executive management, as you can see by the schedule here, and for corruption, purchasing, accounts payable once again, but that's not where we're talking about today. But I wanted to show you these because it does give you that sense, and also I think a realization that vendor fraud is something that is a key area, but yet is still something that I'm not sure how much we're looking for it in relation to the other frauds. Now, from a financial statement point of view, so, moving off of corruption and misappropriation of assets and getting into the financial statement aspects of things, not only is the executives, the CEO, CFO being in the top fraud cases, but the most common fraud technique was improper revenue recognition, and then followed by overstatement of assets, which in a lot of ways is very common and very similar to the revenue fraud. So you book revenue, you book an asset, could be receivables, it could be even fixed assets in some cases. And again, that's accounting for over 60% of the cases, which is up from the previous study that was done in 1997, I believe. And so looking at the cases, so it's growing. Financial statement fraud's a big issue, and to that end, I think one way to find financial statement fraud is to do good ratio analysis and taking a look at some of the account values. An example I'll give you is unfortunately in accounts payable, but I remember starting at a company and having them immediately say to me the first day, we have more purchases than ever in this company, yet our payables, accounts payable, is decreasing at like an alarming rate. And it's just very strange, that you have this kind of situation where we have increasing purchasing and decreasing accounts payable. And sure enough, there was something happening in that accounts payable. There were a lot of credits that were happening that were bringing things down, and they shouldn't have been in there, and or should have been reconciled. So that kind of brings us to good old ratio analysis by the CFO when he was hiring me in that particular case was pretty good. It clued him in to the fact that there was something there. Now, these are the different types of indicators that are associated with revenue management, and these are just some ideas of things that you might want to run. a lot of companies have these statistics very available to them, and something along the line of that you can go to like a planning and analytics department at your company and attain this. I find in looking at the different files, or just let me kind of go here to the ratios. I'm going to bring one of the files over from our list of files here. Just bear with me 1 second here as I do that. There we go. So this matrix of indicators is a file that we've provided you, and it not only has kind of a listing of all the different types of ratios that are available, but I've also created a tab. There's 2 tabs. One is the ratio, and it explains how to calculate each ratio. And then there's the matrix of those ratios. And I remember when I built this that a major focus of it was revenue and overstated assets. So we talked about the 2 different types of frauds that are most common in the financial statement area. And as you can see here, this section right here is where you could be focusing, and what you're going to want to look for is things like an increased current ratio or quick ratio, because you're going to see receivables are going to start showing up and not going away. The increased days sales outstanding will happen because in a lot of cases there is a failure to actually have a sale. It's more of it kind of looks good sale, but it's not really a sale. And that's where I think you're trying to look for kind of an odd situation when it comes to your asset to liability ratio and to your days sales outstanding. Other ratios in here obviously are things like the days sales in receivables, increased profit margin. I think if you can do any sort of sale analysis and look at it by month, as we'll talk about later in our pivot tabling, I think from a financial statement ratio though point of view, just looking at the financial statements and saying how is revenue trending by month can also be a very very interesting thing to look for, because it may just show management where it's showing how numbers are just kind of increasing each month and with not a whole lot of let's say accounting to back it up. Other things to think about are decreases in cash flow ratios, because a lot of times these receivables and phony revenue that's being posted or managed revenue isn't really earned. It's not cash. It's more of things that people are posting as more of an accrued revenue or deferred revenue. So let's kind of get off of that for a second. And just noting here, I wanted to provide those ratios. I mean, we don't have financial statements, let's say, to test that on today, but I just found it useful to have that, especially if you can get access to financial statements for your company in Excel, and you can get it maybe even by month. That makes it a lot easier for analysis purpose. In setting the reporting objectives then, and really now kind of getting into, now that we know the different types of revenue, the different faces of revenue fraud, I wanted to talk about some of the audit program steps that you might want to establish. So in looking at this recent study, I found this very interesting. It was really more on doctors and the healthcare system alone, and there's a link there if you want to watch it. It was pretty long. It was each session is about 20 minutes, and there's probably about 6 or so sessions. But it was a great analysis of in the world a medical profession of the world, and just getting a sense of where are things failing and where are things doing well. And what kind of comes out of this, and it really fits to why we need to set up audit programs. Doctors aren't really being challenged, by anyone, and it tends that if a nurse comes in or someone comes in and says, you forgot this, or you might want to try that, it almost is viewed as a bit of a disturbance in that particular aspect, from a surgery point of view, that person just wants to, do the surgery and not really be told anything otherwise. But what happens is there's this feeling that doctors are smarter than everyone in a way, and therefore we don't need to, kind of challenge what they're doing or put it to a checklist. But the one thing that came out of the first session, and I found it really interesting, top recommendation of the series was to get a memory jogger. That I think that sometimes a lot of times we just forget the most important things to do, and that's kind of the most important thing to do. And there are one example of that is that if doctors had just washed their hands and followed more of a just a cleanliness type of routine, they would have reduced the number of infections by over 2 million, and that's just in the US alone. So infections are rampant really just because people aren't following a checklist and following through on it. And I think it's a matter of knowing what you really should know in that area. So if you kind of forget, or if the person isn't trained well enough to know what to look for, this checklist is there for you. So, as part of a checklist concept, I wanted to provide you what I had here. And I took this from a book I wrote a long time ago, back in the early 2000s, on auditing revenue with ACL software. And we used to call it ACL batches, not scripts, which they call it now. And what we did was we aligned the audit objectives to the questions, to then the scripts, which then gave you these reports. And as kind of another set of, if you will, file that we're providing here, let me just kind of go over to the Word documents here and get this revenue test set sample audit program. So in this audit program, I'll just kind of scroll out here so you can see it at a very, very high level here. What I tried to do here is to take each audit objective and align to each audit objective the different types of questions that you might want to ask, and that would be across things like are things authorized from a shipment point of view, from a cash receipt point of view, are they complete and accurate, and again questions along those lines, and are things properly valued and presented, and things along those lines. And we went through about 5 different audit objectives. Now you can have much different ones, but I wanted to at least give you some sample to work with. So in kind of drilling in, and I'm just gonna jump down here to are things properly authorized? Do sales exist? One thing you might want to do is send out statements to some of the key customers and make sure that these balances really exist. It's confirmation, and we all know the auditors will do this in a sample form, and usually they'll use monetary unit sampling. But there's no reason why you can't take some of the larger vendors and provide, do this type of analysis just to get coverage on revenue alone. I would also, and as part of the work that we're going to do today, I would identify some vendors that are odd, that are coming out on the trending, and I would also send statements to those vendors. Accounts payable auditing and statements are, is a key thing. I mean, I find that accounts payable, one of the best ways to find money in accounts payable is to send a vendor a statement request and see what comes back, and see if they have lots of credits for you that you didn't get. Looking down, what are other things to be authorized? What are the different types of approvals that are being put to sales orders? And this is in the data. What types of credit limits are being set up in the data, and how is that being monitored? One of the things that I'll do is just summarize sales by month, by customer, and just align it to the credit limit. I mean, not that it's that's a perfect analysis, because cash is coming in and paying off invoices, but I just find that is a way of identifying some issues where customers may be extending beyond their credit limits, and salespeople may not be changing that. From a pricing point of view, and this is where I probably spent the most amount of time. And I think about why, and I think the reason is it seems to be an area where people can play with sales in order to get a preferred status, so they can sell goods to, let's say, a governmental entity at a very, very low rate to get the sale, and then who knows what might be happening on the side of that sale. in many ways. So there are definitely things to look at from a sales point of view from a low perspective, but also even a high perspective, because if prices are being charged, more so than not, maybe there are kickbacks going back to the salesperson or to the company with regards to that sale, and they're using the spread between, what it normally costs and what it currently costs to be that spread. And these are things that just by trending pricing by customer and product, and we'll do our best to show that today, just by doing that analysis, it usually finds that vendors are paying the same amount for a particular product across an entire time frame. However, if you do find some variances there, that is definitely an area for focus. I'm just going to continue a little bit down here, just to get down to maybe some of the accurate and complete sections as well. One of the things that I like to do is to take payment data and take sales data and try to recreate the accounts receivable, like almost recreate what is open as of now based on the data. And a lot of people don't expect you to do that. They more or less expect you to use accounts receivable aging reports that may be provided to you or other types of reports, but won't expect you to actually ask for the data file of all the cash receipts by customer, by invoice, and align that to the shipments. And again, just looking at cash receipts, and what I was going to say is really looking at adjustments that are being posted. That is one of the best ways I find of finding where people are playing games with invoices. Just a few examples that may come up in the data, in the audit program here. As I continue just looking down here, but one of the things I've seen is where people will play with an aging of the receivable by taking a sale, crediting the sale, and then reprocessing the sale within, let's say, a week's time. And that reprocessed sale has a new invoice date. So now, they've changed a 90-day item. They credit it out so it looks like it was paid, and then they kind of replace it with a newer item so it has a newer date. And this type of analysis, especially if you're looking at a customer and kind of looking at debits and credits to that customer, you'll start to notice that certain customers have lots of positive and negative transactions, and some of them are just normal. I mean, they just really have a lot of invoices and then maybe one credit here and there. But I think those vendors that have lots of debits and lots of credits are something to look at. So, I mean, again, just trying to give you some ideas of how to take these audit programs and turn them into audit steps for analytics, which we will be doing in a little bit. So, looking at kind of the aging, as we said here, I think just taking accounts receivable balances even for a few periods. Whenever we do a vendor audit, we will ask the vendor for accounts receivable at various months, maybe like 3 or 4 quarters of time over the period of the audit, just to get a sense of how things are being paid, and looking at whether or not the company that is paying that vendor is kind of keeping up with that particular accounts receivable, or if they're kind of playing games with that accounts receivable. And I think similarly, at the company, you could be looking at almost a monthly accounts receivable aging by customer, and kind of looking at the trends there and looking at how things are changing. Are they going down? Are they going up? But also, and in many ways, what I just said, the debits and credits within there to kind of create that. So, you'll usually, a lot of that usually will kind of pick up in the actual aging report. Last one, making sure that audit trails are maintained. To that end, I'm just going to go back to our slides here. And now that we've gotten a sense of some of the audit program steps, and I tried my best to give you an audit program, many of which the steps are inquiry. You can't really run an audit test on things like, does a person approve the price list once a quarter? I'm not sure that approval is sometimes in the system. It might be something where a person actually sends an email and says, yes, I approve it. So there are many things that are inquiry, but then now that we get to kind of the audit trail and data files, let's talk about that. where are the data? Where is the data? Customer master file is a key place to take a look at. But I would even say looking at the changes to the master file is something that I find most interesting. Now, a lot of people will say to me, we don't have a log. We don't track changes in our customer master file. And that's okay. What you want to do though is try to get a customer master file today. Try to get it from last month, or maybe get it from a month from now when it's available, and to keep kind of adding to that list of data files, because what you'll want to do, and one of the tests we'll talk about, is looking for differences within that file, looking for changes in address, looking at changes in bank account numbers, and I find that this is another area where if we're looking for phony customers, if we're looking for kind of corrupt customers, a lot of times they don't have, well, a lot of times they have many changes to them. Because people are generally covering up what's happening. So that'll take place not only on the customer master file, but I almost say with all of these files. I've tried in many ways to get an invoice file from a year ago for a particular company, and an invoice file as of today, and for the same transactions, and take a look at, has price changed, has quantity changed, has anything changed? It shouldn't. I mean, there should be almost no change between the two periods, and this is a way where you can use two different time frames of data. Looking at other types of data files, it starts out with a sales order generally, and that sales order will then lead to a shipment or an invoice, and usually the shipment comes first, or delivery comes first, and then you have an invoice coming, and that invoice is broken down both into a header record and a detail record, so you have kind of both at a top line, what is the total amount, but also from a detailed line of what is in there, from an actual item being purchased, service being purchased, detail. That detail should tie out to the shipment detail. And, again, if we're really auditing this, one of the things to consider is to take a look by customer, by shipment, by quantity, and look at that in relation to sales. It could even be done in a trending way. I mean, you could say by customer, by product, and look at the total dollars that are happening in the invoice side for 2014, and then take 2014 and look at the shipments by customer and item. And it should be the same. I mean, it should be very, very close if you align those tables. There might be some differences for adjustments or rebates or who knows, but generally speaking, it should not be that far off. And that's where I find where things can get a little hairy, because I find that you will have invoices that don't have shipments and a lot of explanations and etc. So another area, though, while I talk about this, while I'm thinking about fraud, is the other side of that equation, where the order to cash, you might not be getting the shipments actually billed. One company I worked with they basically sold a variety of construction materials. And what we, in the old days, I'll say many years ago, we didn't have as much of an integration of the shipping system to the invoicing system. So somebody had to reconcile it every day, and you never really knew if you were missing a shipment or two, until that person did that reconciliation from an invoicing to shipment point of view. Now, if that person doesn't do the review that well or misses something, it is an opportunity for us to identify shipments that were never billed. And again, most of the analysis, we're more worried that there's invoices with no shipments, but I think there is another aspect to this, which is cost recovery. From a pricing point of view, what I've done is more of an average price by product over time, and actually looking at the sales data, and then taking that average and aligning it back to price tables. And then from a user employee information point of view, and what we're trying to get here is just information about the people posting these transactions and aligning it to the invoice header and detail and etc. Now, in looking at these tables, I find the customer master file is very easy to get. I find, be it an SAP or Oracle, it tends to be even one file or two files that you're putting together. It might be based on site location. So you might have kind of a location code for each customer, excuse me, a customer. But that's one. The log change is tough to get, but if you can get at least a monthly file, you can try to look for changes that are happening in that data. If a person changes it back, you might not catch it, but it is something where no one expects you to be looking that way, so you usually can find things. Sales orders start to be a file that many companies don't have. They'll have a difficult time kind of pulling for you, and will more or less just kind of relate to the shipment detail and invoice header, which is what shipment detail and sales invoice detail, which is where I tend to spend most of my time. I find those two tables with the pricing table tends to be where I spend a lot of my time, with the customer file being something to look at, but it doesn't really drive revenue, so the numbers themselves are really in those 3 or 4 files. The invoice detail and shipment detail, as we said, we can align together, as well as align to the price table to validate that as well. Now, okay, kind of following this logic then of the audit program, and now we have the data files. In one of the data files that we've provided you, just bear with me one second here, the revenue test set for ACL reports, what I did was I listed out the reports that come in the test set. We have the various names of those scripts over here, and then over on the right hand side here, I'll just scroll out a little bit so you can see it, and by scrolling out here, you can see off to the right here we have X's in each of the areas where you should be thinking about a report, a data field. So we have invoice sales for this particular customer, weighted sales outstanding. We really should get the invoice amount, name, number, invoice date, invoice number, probably have the payment date. Payment date should have been selected there as well, but maybe that's a little bit later in here in the invoice sales detail file. But the goal of this is to create this matrix of different reports and different data fields that you want to pull for these reports. And I find if you are going into this area of revenue auditing, to take a look at some of these reports, a lot of the reports we're going to talk about today, and try to run for you, and obviously then think about the data fields that you need to run that, but then to collectively kind of pull back and say, almost like I've done here, for all of these reports, we really need these tables or these fields from this table, and we're going to need these fields from this table, and so on and so forth, customer file, etc. And I think that is ultimately where you're headed, so that you can get a data request to someone that has a lot of the data. Now, a kind of a shortcut, if you will, is really just to copy these fields here from this data request, put it into your own Excel spreadsheet here. We'll just quickly do this here, and by aligning, setting up these files, you can almost set up what is a standard data request for sales just by using this tool here. I just think it does, it kind of behooves you to use this only. I think you really should be expanding beyond this particular document here and thinking about other reports you can run, and reports that are very specific to your organization and as it relates to revenue. But again, a good starting point. Wanted to at least get you something to start off with. And with that said, let me just get back into here. I find that there's something to be said for really just trending the different types of reports from the different perspectives of who, what, when, where, and why. And I find a lot of the reports that we generally run are query based. So we may say, who doesn't have access to the system but is posting entries, and we get this list of people that are posted access. It's very specific. The data mining is more of a summary of that data, and looking and trending and saying, we have this one person that just signs in every last day of the month and posts all these transactions, and then they're back to nothing again. And that's where data mining comes in, and kind of looking at it over time. I think that it comes in two different flavors. I think there are tests that are kind of looking at the actual control itself. And again, maybe in some, just taking a specific example, you may have a direct control that says you can't enter a duplicate invoice by customer for the same invoice amount and customer. Let's just say that would be a direct control. You could test it, see if it works. If it doesn't, see why. And whereas control circumvention would be an area where you're looking for people that are essentially playing a game around the system. And I find, taking control circumvention as just an example test, what we could do here, it may be breaking up sales into smaller sales, so that we could make a sale. It may be utilizing a particular price that's outside of the pricing table itself, and when aligning to the price table, you'll identify kind of a deviation there as well. It may also be where different adjustments are being posted by people that generally should not be posting adjustments and don't have access to post those adjustments. So or shouldn't have access to post the adjustments. So it's things of kind of looking beyond what we normally expect as per controls. So taking a look at the perspectives, and we're going to jump into Excel in a second here and show this, but I think it's good just to talk this through a little bit. I think summarizing it by person is key. I think summarizing it by salesperson is a really good one too, but also by the employee that's processing the sale and processing that invoice. Taking a look at write-offs and adjustments also by the salesperson, by the customer, by the employee that's posting it. Again, adjustments kind of, it makes you wonder when there's lots of adjustments in a particular vendor or customer account. Obviously, looking at that approved user list as well. From a contextual summary point of view, I like to look at things by transaction type, by location, within the company itself, by maybe even the different types of sales account that it's posting to. Is it a direct sale? Is it an indirect sale? There's all these kind of contextual summaries that can be made, and I think I believe no one expects you to trend those contextual summaries. So that's kind of where you find, the issues. Trending tends to be by time. I think that whenever we say trending, I think time is kind of the one way of doing it. I think about that more as to how else we could do it. There are other trendings though that as we get into the examples of just even looking at the amount itself and seeing whether or not that particular amount is happening over and over again to different customers, and if it's an odd amount, and that's trending. But again, it's usually over time. So it's something where you're looking at like how many did we have this year and how many did we have last year. And to give you a bit of a visual of that, I'm trying to show you here, this is a summary by the enterer, the person entering, in this case, let's say the sale, and the month of the year. So you can see by year, each month, and get a sense of where there are pockets of higher activity. And I would even say just abnormal activity, just where it really goes off the charts, versus just being a little bit higher. And you can see here the yellow line on the left-hand side here probably has the most focus towards that. And in looking at the different types of things to do with data, I like to code data, and I tried to provide today the few functions that I use the most in the revenue area, and taking a look at things like maybe a Benford's law, which is that first digit of any number, and looking at the kind of the digits of numbers. We'll talk about that. Doing an average maybe of an entire population, a median, a max. We're going to show you how to do that in pivot tables, but I still think being able to kind of get this data does not hurt. From a mod point of view, that is calculating the round dollar scenario. In the data itself, and seeing if you have round sales, because round sales shouldn't happen generally. I mean, it's something where people should be working probably where there's cents and tax percentages and whatnot, that it doesn't usually end up being a $10,000 sale, but that is something to obviously look for. From a date and time point of view, you can look at things like the week number, the actual number of the week. You could take a look at the weekday. You could look at the actual net working days between two periods of time. If you're looking kind of timing of sales or timing of day sales outstanding, these are all good functions to utilize. So with these functions somewhat in your mind, let me jump over to the Excel file that we've been using, and this is one that you will use as part of this for kind of most of the session today. Because we're going to jump into a lot of different examples. So one, just kind of showing you the layout of this, we have invoices here. I have some invoice payments here as well, and we have a duplicate test we're going to talk about. The invoice payments, by the way, is based on this payments tab where we align the invoices and payments. We have the duplicate test, and then we have a customer master file, old and new, so that we can do a testing of that as well. So, just kind of jumping into the invoice table though, I don't have a whole lot here. I purposely have coded the round dollar items and the week number items. Let me continue there though, and let me just add a couple more here. I'm going to add a DSO, Days Sales Outstanding, and that's going to be well, actually we don't have DSO, excuse me. Let me just do days to shipment. So that's really what I wanted to do. And I want to do the shipment date minus the invoice date. And we're going to turn that to a number. Notice it's formatted as a date, so I'm going to turn that into a number. And it looks like, in many cases, we have lots of things that are shipping out before the invoice is posting. Excuse me, hopefully I did that right here. Nope, did that. So we want to do E2 minus G2. Sorry about that. There we go. And then copy that down. So that will then, in looking at it, we now have E2 here minus G2 here. It's color coded for us. And then that is providing us the number of days per sale to get to a shipment. Some things are less, some are more. We also have salesperson in here, just kind of a basic one as well. And I'm just trying to get a sense of who from this, as well as when from the week numbers, and then from a dollar point of view, the amount. Now, taking the amount itself, we're not gonna do Benford's law right now, but I'll show you how we can play with that amount field and see how we can maybe find some odd activity. So in looking at the data, what I'm going to do here is I'm just going to add now a pivot table. So I have a week number field in here. As we said, we have this round one, and we have a few of these codes set up based on the slides. And now that we have that, we're going to insert a pivot table. The pivot table, you might want to just check has aligned to all the data. It appears to, so that's good. And what I want to do, first off is I'd like to take a look at that week number. So I'm going to drag that into the rows. Let me drag this up a little bit so you can see it. So we're going to drag the week number into the rows here. We're going to put the amount, the sum of the amount, into the values. And we're also going to put a count of the week number, a count of that week number. And the next thing I'm going to do, and there are a couple of different ways to do it. I'm going to do it a little bit easier, I think, and go back to this data to add a field. But let me show you the less easy way to do it first. One of the things you could do is you could add invoice date into the data, so that now you have kind of the various invoice dates laid out based on the week that they're occurring. But I'm going to group that invoice date, and I'm just going to do it by year. So I just really want to see the year here. Now that I've done that, and I've right-clicked to group that date, I just kind of right-clicked and said group. Oops, sorry. So I took this year here and went group, and then just selected that particular item here. You can also get this information up top in the pivot table tools section, where you can click on a field and click on group selection or ungroup. I'll ungroup it just to show you, and then we'll group the selection by year. Okay, so now that I have that, I'm going to drag that year field on top of the values. And let me just actually, and that provides something that I'm not as happy with, so I'm just going to bring the values above that. So we now have values on top, invoice year below, and that then lines up my sum of amount for both years into one analysis. And as you'll see here, we have some data in 2010, mostly starting in week 36 and kind of carrying through. And then we have a lot of data in 2011 that kind of gets us through week 43. So it's about a year's worth of data. It's not the most comparative. But what is interesting is as you look at some of the fields here, is that some of these week numbers, are really kind of odd in relation to other week numbers. Looking at this particular one here, where we have about 1,300, 1,400 invoices happening within a given week, the 43rd week, the last week that we have data in the file, whereas any other week before that, we may have had 200 or 50 or so invoices. So there's kind of a major change in count there, and I find the week number section or analysis here and relating that by year can really provide a lot of analysis, because you can almost start to see even trending by week if things are getting bigger or larger by week, if there's a bit of like a smoothing by week. And again, people do not expect you to look at things by week. Okay, let me take the week number out of the equation for a second and bring back this invoice date year field here as well. As we said, if you wanted to, we're going to kind of group this section. If I wanted to do it by month and year and just take a look at data by month and year, we can do that as well. So you can see here we have the month and year. But what I'd like to do now is kind of add that salesperson into the columns. So now, we have kind of each salesperson by month and year on here. And I will take out the sum for now, and I'm just going to focus on the count. How many sales is a person processing during that time frame? So, hopefully I'm not moving too quickly here on moving some of these fields around, but you can really quickly see how just moving fields around can drive the pivot table. So if I get rid of salesperson, and this may bomb it out, but if I add customer in here, there's a lot of customers, but you could do that, and you could do this customer analysis by date. But let me go back to the salesperson and just bring that into up here. So what I'd like to now show you is just a quick charting of this, because I think it's useful to pivot chart this. I'm going to take a 3D model of the data, hit OK, and I'm going to just move my chart to a new schedule so that we can see that as well. And very quickly you can see patterns where let's say JB is posting quite a bit in the data itself. RB is not as much, and then web sale is oddly very, very comparative to JB, and it's almost to a point where as you look at it by month, you could almost argue that like the months are exactly the same, that the web sales are equal to the JB, and a lot of that is my own design and setting up the data for our purposes today. But there's something to be said for a duplicate customer that is set up in the system to mimic this type of activity. I mean, we're looking at it by salesperson, so it's a little bit easier to look at. But if you did it by customer as well, you also would see this trending, and you would see like web sale and JB are perfectly aligned. I've done some audits, more so on a payroll side, where you'll see billings for people, so you're being charged, the company's being charged for consulting time, and you'll actually see two people in there with exactly the same amount of time, exactly the same days, exact. And when you challenge people on that, they tend to just get rid of that person from the billing and say whoops, or whatever they say. But there are ways that people like to duplicate transactions for purposes of just inflating sales, and a lot of times it's done in a very simple fashion like this, where you're doing it by a salesperson or by a customer, because it's easy to track. You just have like that one salesperson where all of the activity is flowing through. Okay, so I wanted to show you kind of by time, by person, by salesperson, give you some feedback as to what we've seen over the years here. Let me just take a look at that. Okay, and then another type of trending that we talked about, but I haven't really kind of shown you yet, is Benford's law, and this sort of concept of Benford's law. And what I'll do is I'm going to go into let's try this here. We'll go into our slides here for a second, and I'm just going to try taking this data, taking this right here and copying that, because it's kind of a long formula. It's not something you want to really type out, generally speaking. And I see my amount field is in column C, and I'm just going to kind of insert a column here. I'm going to add, whoops, that. And by adding this function to the actual data, what I can do is just change it to C2 versus B2. Notice now it's focused on the right field. And what we have here is the first digit of numbers. Now, let me just first digit. Okay, and what I'll do is I'll just even bring it down so we just have it like that. It's pretty easy to focus on and see in the data itself. Now, I go through all of this, by the way, to kind of get rid of things like pennies or excuse me, to correct for things like pennies in the data or 0, 1 penny in the data kind of thing. And this is a way of doing that very, very quickly and also just validating things. I also kind of get rid of all, negative items, as you can see from the absolute value function. And then I'm rounding it, I guess, to 0, but for some reason, my formatting had it where I had 2 decimal places, but it is rounding it down, so that's good. But this function here I got from Mark Negrini. I have to say, is very good at Benford's law, and definitely take a look at some of his books on the topic. What it really kind of gets to is that there is a frequency of numbers, and that frequency of numbers can show trends, and what Mark likes. Let me just kind of go back to our pivot table here, so we can take a look at this. Now, notice here in the data, I don't have that field showing up. Like I put it between amount and round, but you have to right-click and refresh your table. So now that I've added the column, I would not suggest adding it to the end, because the pivot table doesn't pick up on it as much as if you put it in the middle there. So what I'm going to do is I'm going to get rid of the, let me just make sure here, take that out here. We just have the years here, and then we will put in the first digit, and we'll get rid of salesperson. So I'm just kind of dragging things around here. But what I wanted to try to do very quickly is just show you by year, digit patterns in data. And if we go back to our chart, which by the way is kind of dynamically tied to this pivot table. So as you change things, it will change things very, very quickly here. You can start to see trends. Now, generally speaking, a company's data, a company's sales data from a digit pattern should stay the same year on year. It really should not change very much unless you start changing the products that you're basically selling. And what Mark talks about, which I liked, was how he was at a company, he was an insurance company, and he realized that by looking at the digit patterns, that he realized a certain insurance product was being sold more than another insurance product. And it was a complete change, from sort of 2011 to 2010 in this case, let's say, but it was a complete change. And it allowed them to kind of assess that and make sure that we're okay here. What Mark's point was in this particular example, it was actually selling a product where the company didn't make as much money from it, but the salesperson did. So it was something where it was very incentivized for the salesperson to make money on it. So they ended up selling quite a bit of that data of that product. Now, I like digit patterning. I mean, I think it's a good concept. I think it finds things like this, especially within the revenue file. But what I like to even do is to take that amount field itself and put it into that area as well. But for this one, let me just kind of get the sum of amount out of here just to keep it less confusing. So this is weird. Normally you put the amount over here and you summarize things. I've put the amount into the row area so that we can look at the amounts themselves. And from a sorting point of view, what you're going to want to do is sort by the count of the week number. In this case, it's years. Sorry, but I put count of week number in here. You could have done count of invoice date or count of amount even. Let's just put that in there just to keep it less confusing. Bear with me 1 second. So we'll pull that out. So now we have the count of the amount, but it really should be the same. In the more sort options, we'll do descending by the count of amount. And then that will line up for us and note, ooh, $77, 570 times, 883, 555 times, etc. And even though Benford's law is really good at identifying trends, like the number 1 for 2010 was much higher, what I really liked about this type of reporting of just looking at the amounts is that this is why. So you could start to look at why are the numbers really kind of jettisoning up in the 1. Well, every 1 that I have as I look at this ends up having a kind of a situation where there's a lot more in 2010 versus 2011. So one last thing as we kind of go through this is, how do I filter for that? And I'm going to bring into the report filter now the first digit so that you can actually filter on that. And now you can start to say, well, I find the number 1 is very curious. We have lots more 1s in 2010 than 11, and let's see why. And this gives you all of the whys. This literally shows you. I think this is the only one where we have more in 11 than we do have in 10. But this gives you kind of that rationale and, to look at. And if for any of these items you wanted to look at the detail, like let's say this 1043, we can double click on that detail and it will bring up all of the detail associated with that particular sale. That you could even go one step further and then pivot table this data if you'd like to, and then start to kind of say, well, what customers are driving this? What salespeople are driving this? And then it's now focused only on that particular report. So, the purpose of what we've been doing so far is really to show you how some basic trending on time, digits, kind of the what in the data, and by who is posting the transaction, or by customer, is another area to do it. You could do that really quickly in pivot tables. You can trend it. I'm a big believer in week number, which is that week num function. But there are other functions that we've highlighted for you as well. We'll go to the next polling question here, but when we come back, we'll continue with this and kind of start looking at day sales outstanding, as well as other graphs and charts that you can run. But then we're going to get into specific reports you can run, and that are some of these other tabs that are in the data. And we are back to the data now. Some of the other trending or analysis that I wanted to do was using pivot tables, but now kind of getting into the days to ship the product, let's say in this case. And let me just kind of get rid of everything. We'll just start over here. So we have a blank pivot table. So what I'm going to do is I'm going to take the days to ship and I'm going to put that in the values. I'm then going to look at this by customer. And I think, why not, if we could do it, I might as well put the invoice date in here, which looks like it's by month and year right now. So we can go to pivot table tools. We could select that field, go groups the selection, and just do it by year. So now we're just kind of looking at year. But right now I don't know if you could see this, but we're summarizing on the days to ship, which is not right. We're summarizing it. What we really need to do is average it. So we're going to put an average there. Let me just make that look a little prettier. So the way to make it look pretty is to go to number format. I've checked with Bill Jelen. He's Mr. Excel as far as I'm concerned. And Bill Jelen said to me, this is the only way to change a number format in a pivot is to actually go in and do it here. You can't, there's no like shortcut. You can highlight a field and just kind of change it like that. But the second that I change the pivot table is the second I believe that it changes, the data itself. So it kind of goes back to, reverts back. Okay, so what I wanted to say is we've analyzed this. I'm actually gonna change my number format and make it 2 decimal places. I almost want to make it more, but we'll make it 2. And then that gives you an idea of the average days to ship by customer. So you could sort that, from high to low. So we'll sort that in an ascending fashion on that average days to ship. And you could see, lots of kind of weird, negative shipment dates, and then followed by others, and then getting down into some of the positive, and then really, really, days to kind of invoice somebody took forever, down here as well. Now, this is average by customer, so it depends, but probably what we want to do is bring the sum of the amount in there as well. And I'm just going to bring that invoice date up there so it just gets you a little bit easier. Oh, no, actually, I want to do it like that. Yeah. So by looking at the sum of the amount that is in that particular field here, you can look at kind of the total dollars, and you may want to kind of focus on customers that have over a certain dollar amount. I'll just get rid of the amount here for a second. I'm just focusing on days sales outstanding. I realize the sample data is a little odd, but this gives you something to kind of review and look for some of the weird ones and whatnot. But let me bring down the days to ship again, and this time I'm going to change it to more of a maximum setting. So what was the maximum? And then we can change it to the minimum. So you can kind of identify for every customer in this case, kind of the maximum, the minimum, and by year. So, one last thing, let me take out customer and put it in by salesperson. And again, there's only 3 of them, but it gives you an idea of kind of the number of days to ship, average based on customer, and just giving you kind of an analysis of the maximum, the minimum of each one as well. So salesperson, I find could be something that no one really looks at, right? Is how to look at days sales outstanding by salesperson, days sales outstanding, or excuse me, days to ship by salesperson is an area to look at. And I still think the salesperson has probably the most likelihood of being at fault or being connected to the problem. So I think that a lot of the analysis should, from a trending point of view, should focus on that. I'm just going to, again, let me clear out my pivot table again. We'll just kind of start over here. And a couple of things I wanted to show you that get more to the graphing nature of trending, and then we have some specific reports we'll talk about a little bit later. But on the graphing side, one thing I didn't focus on, maybe we'll bring the shipment date into here, and maybe even the dollar amount by shipment date, so we can get a sense. This gives you, if I look at the chart that we developed for this, so we had this by day. Now we have the shipment date here and the summary of amount there. We can start to look at things by day and look for strange days. Now, I understand this is really small, so you have to kind of scroll into it by day to get a better sense of things. But you can obviously see there are certain days in here that really kind of extend out beyond anyone else. So and you can highlight that and say, that's the middle of September. And this is another particular date. It's probably like the middle of March or something like that. So it gives you these time frames, and a lot of times, it's interesting to look at these sales patterns by day. And as we said before, I think even just to kind of drag the salesperson concept into here, maybe even drag it into the actual graph itself, this gives you another perspective now by salesperson. I understand if you have 100 salespeople, it's a lot harder to look at, but just looking at a few at a time here, even, you can very quickly see patterns, and really the pattern should be about the same for everybody, I suppose. It's more cyclical for the company or what have you, but then just looking at patterns by salesperson and time can be really one of the more effective ways of looking for any type of fraud. Now, I as much as I'm looking at this on the revenue side, I always remember that where I got this was travel and entertainment fraud, and taking a look at travel and entertainment by person, and by the title of that person. So, looking at, let's say vice president or what have you. And, maybe instead of, looking at it by salesperson, you could look at it by title of salesperson and getting a sense of director and VP and that kind of thing. So if that helps, this is other ways to look at it by time. But I also like to get who is involved as much as possible in that analysis. Now, we have a whole session on this, so we're going to go to the slides here for a second and talk about something. I do have a whole session that talks about scatter graphing, and it's part of our visualization course that we do. But for purposes of today, I really just wanted to show you. Imagine for a second we summarized into a pivot table this year and last year's sales, and then look at differences by customer. And what we're looking at here is the differences by volume and value by customer in the years. So, just kind of keep that in your mind. Look at keep this graph in your mind. We'll go back to this data, and we're looking at volumes and values again by customers. Let me just kind of get that out. We'll just bring the customer in here, and then in the shipment date point of view, just bring that up here. And what I'll do here for purposes of this, we're just going to group the shipment date as we were doing before. And we're going to do that just by year. And again, the point of this is really just to get a sense of 2010 versus 2011 in dollar form, and then in count form. And by doing that, you're essentially, we have the count here, so we can say 2011 minus 10 is the count difference. 2011 minus 10 is the amount difference. And by looking at from a scatter graph point of view, what we can do here is take the different, we'll just copy and paste this data for this purpose, and bring it to a new schedule, new sheet. I'm going to paste with values. I'm going to paste values just to kind of not have a pivot table show up. And really all we're doing here is kind of looking at the differences in value, which is 2011 minus 2010 here. And then we look at the differences in volume here. And by copying that down for the entire customer list, we get this value and volume. Now, this is a pain to kind of look at, on its own. So if what we do is we insert a scatter graph of this data, just that data alone, as you can see here, it creates this, very nice analysis of change over time. And as you can see here, like the differences between customers are within like $100,000, let's say, for purposes of our analysis. But there are a few here that are really dropping down, and we have a few here that are really going up. And this one, just to kind of highlight in here, and as we get into the slides, from a scatter graphing point of view, this one looks really weird, especially this one too, because you have more money, or more sales, but a lot less invoices. So interesting and something to look at. So as to the data files that we provided here, one of the things that I did was I included a PDF file of an article that I wrote many moons ago, but it does talk about this whole scatter graphing concept, and I'm just opening it up in PDF form here for you. So this is it. It's from Fraud Magazine, the Certified Fraud Examiner magazine, and as you go down here, you can take a look at how this is coming right out of the slides here, and how to do that, and how to kind of paste special and then calculate. So I wanted to do this one more quickly today because we have other courses focused on it, but at the same time I think the scatter graph of customer change, value, volume, and salesperson or location change, like if you have many locations, that would be another area as well to take a look at as well. But that scatter graph is fantastic at finding change, and while you could do it in more of a tabular form, like we talked about in Excel, I just find the graph really makes it pop out. So this kind of explains more about, we'll skip over that, explain more about kind of scatter graphs and which kind of buckets look weird and which ones don't look weird. Another, trending that, again, I found great value in, even in sales data, especially if you look at description fields of sales data, like the item description field, where it gives more description of the sale or, why we're making the sale. Doing a textual analytic of that is useful. And I'm just from a speed point of view, what I found was with, from a summary perspective, most people do not expect you to look at their words and to kind of summarize the words. They do expect you to look at the dollar amounts. They expect you to look at the dates of things. That's very important. But the actual text in a invoice file or a sales file, no one really expects you to look at. And I like it for that purpose because it's unexpected. It's something that no one really expects you to look at. But yet, like Benford's law, like this digital analysis that gives you this kind of perspective of numbers, I find textual analytics gives you this perspective of the text and allows you to understand why people are making some of these transactions. And I kind of feel like, why not use this approach? It's like Benford's law, that digital analysis, and that you're able to look at all data very, very quickly at this high level. And let me just show you a couple of examples here. Again, we do have courses on textual analytics. It's just focused on that. But this is just giving you an idea of what you can do. What I did was I summarized all the words and I got it down to where did a word show up in the data, and what is the word, and what is the dollar amount associated with that word, and just kind of getting over to some of the charts associated with this. Let me just kind of get here. Well, we're looking at a lot of data here, but I think it's millions of records. I think it's like 11.6 words that we're looking at. So if these 11.6 million words, they really do summarize down to letter patterns that don't change much over time, and just really kind of focusing in here, at just one thing. Let me go back to this pivot table. If we just kind of focus in, just I guess we just need to make this a little bit smaller so I can see it. Just bear with me here. Try to get that into the report filter as well. Well, what I was trying to do is just let me for purposes of time, it's really just looking at the red and the blue items in this chart. So just these first two red and blue items. This is looking at the first word in the data, A to Z, just like Benford's law, but now it's using the letters, and it's kind of year one versus year two. And we're looking at differences in usage of certain letters year one to year two. And pretty quickly you can identify some of these high patterns. Some of them aren't really that odd, but definitely some really jettison out and extend past what last year had for that particular data point. I think the letter P here is far more than what it was in the previous year. I think it's double what it used to be. Now, what you can do there, very similar to Benford's law, looking at patterns of why things change, you can then focus on the letter P alone, looking in the data, and then kind of looking at that trending of the letter P over time, and then you could double click on the actual data itself and get into the data itself. But my point of this first kind of letter analysis or letter analytics is to show you that there is a pattern to our letters and words. And if you can summarize those letters and words, I think it's very effective in identifying change over time. The other report that we looked at for purposes of this is looking at keywords. So if you had a bunch of keywords like adjustment or a bogus sale or whatever you wanted to look for, you could do an analysis just like we did, but only of the keyword usage. So now we're just looking at what keywords. Let me just highlight everything here so you can see it. From the keywords, what were kind of the letter and word patterns? Like, where did these keywords show up? Did it show up in word 5? Did it show up in word 10 within that description? And this is another way of looking at things. And my sense, it can be hard to audit this entire schedule. I agree. But I think looking at some of the top patterns, why in the letter A in the fourth word do we have lots of occurrences of a keyword that we're worried about, or wherever. But again, looking at some of the top ones, I think will identify some trends for you. What I've found here in looking at the descriptions is that discounts were given in some periods versus others without giving away company product names. It was literally, a company product name with the word discount after it. And that name of that product, the letter for that product, drove up quite dramatically. And we were looking for this word discount, so that's kind of the bad word we were looking for. So, this is like, what does it really find for you? It can find patterns of discounting or rebating that's happening in one period, but not another. And many other things. So textual analytics, let's just quickly go through the slides with it. One of the notes here is that, the key here is that if you do have a keyword table, you would need to, get that keyword table and VLOOKUP those words to your data, and that would be as part of this analysis for keyword searching. Another thing to look at, I don't find people do this very much for revenue data, but really should, just to see where are they selling, and geo-mapping data. And from a geo-mapping point of view, there are a variety of products out there that you can utilize. There's something called power mapping. Power Map is something that Excel uses. There's GeoMap, Map Point. There's Map Point, which is something that Microsoft sells, and it's just a map product itself. There's Batch Geo, which is a website that you can go to, and you can upload your data to it. So those are the three that I tend to work with. Like Power Map is in Excel, but it's only in Excel 2013, so you just have to worry about that. Batch Geo and Map Point. But between one of those three, you should be able to find a product to pretty quickly put all of your data into it, and very quickly, like you're seeing on the screen here, get a sense of not only the type of customer, but even possibly, from the size of the bullet, from the size of the little item on the legend here, you're able to really see the size of that vendor and where there are pockets of activity that are much larger than others. Okay, well, getting into now more specific reporting that you can utilize to identify unusual sales activity or just straight up fraud. Some of the things that we talked about, creating like an average, and then you might want to create like an average sale by customer, and then align that back using VLOOKUP to the data. And we're going to show you how to do that with invoice payments in a second here, but again, you could use VLOOKUP utilizing this average, and we'll try to quickly show that as well. You could align a customer and shipment to the actual invoices if you can, depending on how they trace that through in the system. But even summarizing quantity and volume, quantity and value by customer and looking at it over time can be very, very useful. These are, lots of kind of random reports. We're going to take a few of them and show them to you how we do that. I like duplicate invoices. I think even just looking for duplicate invoices by customer and amount can be very interesting to see. Is there kind of a changing of the invoice and then reposting of the invoice, that type of thing. From a customer file point of view, you might want to look at customers that have no address or phone or TIN number. These are kind of simple things to do. I mean, you could just almost like sort the address field, as we'll show you in a second. We've talked before, and I will show you how to do it, of kind of analyzing unusual changes in time. So looking at customer data 1 year to the next, looking at invoice data 1 year to the next, and I want to show you how to do that as well, because I think these kind of relationships are very useful. And I'm just going to kind of skip over and just get into some corruption detecting analytics, just to kind of note this as well. One of the things that you should be thinking about, is corruption, and whether or not people are selling in a preferred fashion to a particular group. And I guess it could happen many different ways, but I think generally speaking, what ends up happening is things are being sold with potentially discounts that are happening as well, and then in addition to that, there's potentially kickbacks that are going to that salesperson. The company, is detrimented because they're selling things at a much lower rate. The salesperson does pretty well. I mean, another way to do it is where you have lots of sales going to someone, even more than you should, and basically they're not even using the product, or they may just be bogus sales to begin with. But I think that corruption is something to consider when you're looking at it. A lot of times when we're looking at these reports here, I think we're just looking at management playing games with invoicing or sales patterns. Okay, let us, using these report ideas, let me just kind of dive into the data again. And this is the revenue data that we've been looking at. Now, I'm going to kind of go into more of a detailed mode now and show you, we have the invoice data here and the payment data here. And we have the payment data with customer number, invoice number. It's usually how it's lined up. And then you have a kind of like the check information as well. Now, what I did over on this schedule was I created a pivot table of the customer and invoice number, and to the right over here, I then copied out the actual. Let me make sure I got this right. Yeah, I copied from here the actual invoice number and amounts, and I sorted it from high to low, so you can kind of see it's been resorted. Now, what I figured out was that there wasn't a duplication on invoice number in here, or at least I don't think there is. And yeah, I don't believe, and the way to look for that is one way to look for it is to do conditional formatting, and you can essentially highlight rules and click duplicate values. Now, conditional formatting has different looks and feels to it depending on product type. I have Excel 2010 here that I'm showing you. But there are other product types. But again, I'm pretty sure these invoice numbers don't duplicate. So because of that, I'm okay with just summarizing as shown here by invoice number. And in many cases it's also by customer, but we just summarized by invoice number and got the total amount here. That was done through a pivot table, and then I copied and pasted the data here. Now I did the same thing for the payments, so let's kind of just do that process here. I'm just going to create a pivot table here, and what I'm going to do is just bring the invoice number here, and I'm going to drag the amount there. And as we said, we can highlight all of this data, copy it, and and you can then bring it over here and do a paste special. And by doing that, it pretty much gives you exactly what's over on the left-hand side, or it should. So we should have exactly the same amount of data and everything else. So that I've recreated the payment side of the situation here. Now, just in Excel, now that we have the invoices lined up and the payments lined up, you can then take a look at the difference. So all I'm doing here is saying that this is the invoice value here, this is the payment value here, and here is the difference. So by using pivot tables and by using VLOOKUP, which as well, you can very quickly kind of align things. Now, in the data itself, we found it was pretty easy for me in that a lot of the data lined up very nicely. What you'll find a lot of times is that you'll have differences in invoices and payments, so that the things don't line up nicely, right? So it will kind of go off kilter, and you'll have less payments than invoices. What you'll want to do there is to do a bit of a VLOOKUP. So to show VLOOKUP, we're going to enter the VLOOKUP command. I'm actually going to click on this FX button, which is right up here. And that FX button in the toolbar here allows us to kind of look at everything we're doing. So I'm going to look up this invoice value here, which is an H3, and I'm going to look up, actually, excuse me, I'm sorry, apologize. Let me just add another column here, because I think this will just make it a lot easier, and we'll kind of recreate all the steps here. I'm going to do a payment lookup here, and I'm going to do a difference here. And the payment lookup is a VLOOKUP, of this particular invoice, and we're going to be looking to the payment data, which is over here. And I'm going to hit the F4 button, which is going to basically set that and not allow it to change. And I'm going to bring in the payment value, and I'm going to type in the word false, which is actually setting up a situation where it has to be a direct match of the invoice numbers between the payment file and the invoice file. And by doing that, for every invoice, I've now kind of aligned up everything where there's a payment, and you can very quickly see the ones that are not paid have an NA associated with that. What I can then do is calculate my difference, just like we've done over on the other side, to get the any sort of difference values or changes or payments that weren't made on invoices. So this is a great thing to look at, and also kind of recalculate, as we said, I kind of said in the beginning. You could almost, or not almost, you can recalculate accounts receivable as of a given date, because you could then filter on this data and just say, where do I have an NA situation with a payment? And these should be all of the open invoices that are on the accounts receivable aging. So it's a way of recalculating the system based on the data. And in this case, I'm using VLOOKUP to align the payment data to the summarized invoice data. Another thing that we talked about, and just to quickly show you how to do it, to create, let me kind of go over to the pivot table that we created before. I'm going to keep the customer in there, and I'm just going to bring the amount field here, and I'm going to change that amount field to be an average. So now we have an average amount by customer. That average amount I can copy and paste, and I can bring it over here to the invoice table just so that we can keep it in one place. And I'm going to paste that as more of a special kind of paste. And what I will do is now VLOOKUP by customer. So we'll kind of VLOOKUP. Give you kind of another example here of VLOOKUP. By customer number, we're going to go over to the row labels for all the average amounts. I'm going to hit my F4 button, comma 2, comma false. And once again, we do have a mapping of the average value now that I've copied this formula down here. We now have an average value that's being aligned to every one of the invoices. So this gives you a way of, so now we're looking at the average value of a customer sale to the actual customer sale, and then we can look at differences in that amount field to that average. So that one approach. Another approach is you could take that customer sale and multiply it by 10, and say, if anything is over that 10 time mark, that's what I want to start looking for, and then again do kind of the, just like I'd done before, the taking that amount field and minusing it from either this field or from the one that you've multiplied by 10. So and so a goal here, I think, in a lot of ways is to summarize the data, or as we did with the invoices and payments, or with the average value, and then align it back to the data itself, so that you can look for trends that people just don't expect you to find. So we'll just continue just for a little bit more, and then we'll just do one more thing. Let me just so in looking at the one other test that is key here. I've set up a duplicate test here, and let me just kind of highlight everything and get back to start here. What I did was I created a duplicate key, and the way I did was that I added up. Let me just kind of double click on this. I use an ampersand, and I put a little pipe delimiter. You could put whatever you want, but you can you're going to have this data, so you can copy and paste this to other things. But this allows you to kind of add up the customer, the amount, and the invoice date together, so that you can have a key that you're working on. Now I'm working off the absolute value of amount because I think it finds those situations where people are changing dates, which I thought was interesting. And that, just so you can see it, that is literally happening right here, where somebody's changing the date from the 26th to May 31st. So that's an option. And this, quickly kind of shows you a lot of the duplication that shows up in the data. Now, let's also then say, okay, now that I've done this and I've created this duplicate key, what I want it to search on. I could do it on anything, but this is what I've selected. I showed this before, but you go to conditional formatting, you say duplicate values, you say yes. I'll change it, I guess, to green fill with dark green text. And excuse me, now you have all of the duplicate keys being selected. You can now even filter by color. So you can just filter by color and bring all the duplicates to the top. You could then sort by that field, and I would probably sort by that field just to get all the duplicate keys all set up for you. And here you go. Now we have anything that was a potentially duplicate sale. I've highlighted one here that really looks duplicate no matter what. And we also talked about above here where by looking at the absolute value of amount, by looking at this one here, you kind of question, well, why did you put it in and put it out? And if you look a little bit further, you'll realize, oh, wait a second, all they were doing was trying to change the aging of that invoice date. And just then kind of talking about corruption, and I wanted to show you a few more things in Excel that relate to this. One of the things that you could do is download databases of address information and align that to your data. You might even want to take a look at code of conduct forms and any sort of related party forms that people have, because getting lists of partner names from that list is really useful, and aligning that back to data and seeing if we have customers that have lots of sales to basically related parties that related to the employee, but no one knows it except for the fact that it's on this code of conduct form. That's something to look at. I think taking a look at any known issue vendors, or excuse me, customers as well. Looking at business partners with a bank country then that's different than the company's address. Like, are they sending money to a different country, and hence it may be something where it's a phony customer. I like looking at pricing, and we haven't spent a whole lot of time on the detail files of pricing, because these files can get kind of big, but by looking at average pricing, like we talked about averaging by customer, you could just basically put the price of a product in there and average it by item and customer. You could do it by item number, and that's all in the pivot tables, so that's useful. Looking at sales discounts, again, if you have like a discount type field, we'll talk about that in the pivot table in a second. And round dollar invoices too, where you could have situations where I guess you just have very unusual sales transactions, and those are round a lot of times to look for. So and just continuing, through the slide itself, one of the websites that you can download a list of vendors that are, or excuse me, customers that are on a watch list. Mostly, this is for procurement management, SAM, so that's why I put vendors. It's for procurement professionals in the federal government, but this is something where you can get the exclusions data package, and you have to click on data access from the website and then go to the exclusions data package. But the sam.gov file, what's really nice about it, it's updated daily. It lists out every customer or every person and business that no longer does business with the federal government. And from a terrorist point of view, I mean, I know that a lot of people, a lot of banks, financial institutions, and many others have to kind of do a match to their OFAC list for customers. So this is something you could do too. I mean, you could download the OFAC list, but I will tell you the OFAC list is already in sam.gov. So if you get sam.gov, it has everything. It's updated daily. It's pretty easy to work with. There are a variety of data packages that you can work with. But the OFAC, Office of Foreign Asset Control, is the one associated with terrorists. And you do want to make sure that these are not on your list. I mean, there almost is no good reason to do business with folks that are on this list right now. So let me just jump back quickly into the data here and just show you a few more things. One of the things I wanted to talk about, we kind of have the customer with the average. Let me just drag this out here for a second. What I wanted to do is really just maybe even come up with a count of invoices by customer. But what I want to do is drag into the report filter the round dollar item that we talked about before. And what we're looking for are zeros. So basically if round 1000 is 0, so that's that field, that means it's a round number. Anything else means that there's some remainder in the sale. And as you can see, there's not a whole lot of round sales, I mean, in a sense of there's only 5, and it may even be worth looking at the 5 because there's so few. But this, again, is a great test to take a look for, and you can double click and look. A few of the amounts are 0, so you don't have to worry about those. And what I wanted to show you here is how this filter can work for you. It's something where it's pretty easy, especially if you have salesperson or location, to drag that into the report filter and allow that to align things for you. Now, one other thing we talked about, with corruption fighting kind of analytics, and a lot of people, one of the big things they will do is kind of match things to SAM.gov, or there is the OFAC list. There's even a CIA list, which I didn't list here, but you can get a list of politically important persons. But taking a look at this data here and thinking about VLOOKUP for a second, what I did was I have the customer master file here, and I have the old customer master file here. So this is from last time. Now this could be the OFAC list, it could be the SAM.gov list, or in this case it's an old customer list. Now what I can do is I VLOOKUP to that customer old. I do it by customer number. I kind of keep it really simple, just by customer number. And we'll just double click on that so you can see it. And then I'm going over to the customer old field to grab that address field. And that allows us to kind of see, are there changes being made from an address point of view. Now I used an if function over here, for those that are familiar. But generally speaking, I think it's a lot easier to use the if function and just say if this field equals that field, hit a yes or a no. There are other ways to do it, but I just think, as opposed to manually, scrolling down and looking, it's a lot easier just to kind of say, is there a match or not? And then if there's nothing, if it's an NA, then we have a new customer situation. So, the VLOOKUP is very effective. It's for, merging and kind of joining files together. And I like it not only for kind of going back to old customer data, but also for going to other types of external lists. This is another area too, just kind of quickly going through other reports. If you go to data filter, you can go to the address field. You could go down here and because we have no blanks, you don't have them, but you could do a kind of text filter, contains something. So if you want to look for a particular person's name, but generally speaking, there's a blank here, and you could select blank, and then so I'll force a blank here. So now that we go into here, you have blanks. You can now focus on only those addresses that are blank, and more likely are associated with a company that may not be on the up and up. Okay, so just getting back to the slides, just a few last thoughts here before we close out. What I have tried to end every presentation we have with is some discussion of scoring and customer type scoring in this case, and I as opposed to maybe looking at a sales transaction to pull, that could be another item as well. But what I like to do is to take all the reports together and kind of join them all together in some way. And by joining them all together, you're able to get a sense for whether or not a particular transaction is showing up on lots of reports, or if it's more of just an unusual one-time incident. I also think by summarizing by customer, in this case the scores, you have even more of a chance of identifying customers that are just showing up on lots of weird reports. So that is something where obviously you can summarize those perspectives, which we're talking about here by kind of the by customer, by salesperson, by when it's happening. You can trend it over time, and just showing the trending over time here. Actually, no, this is just kind of charting the score, which is just taking a look at kind of the value and volume of the score to the actual value of that transaction or to that customer. And it's kind of like, what was the total score to that customer and what was the total value. And you could focus on ones that are of higher value and higher score. I mean, it's that simple. And once again, VLOOKUP is used to bring it all together. It's something where, in this case, we're VLOOKUPing between sheets to be able to align reports together. So let me just open up this one's last schedule here. Notice here we have let's say, whoops, we'll just put here customer number here. And by having the customer number here, we have a total score, which is based on a calculation of all of these. Well, each one of these is a VLOOKUP, and a VLOOKUP goes to each particular tab in Excel. Each tab in Excel is a report. So we kind of have the customer number here and the score for that customer number for that report. So one of the things you could do is, if by pivot tabling each of the weird reports that you have by customer number, you can put the results of that into a schedule like this. So you have like one for each. And if you do that, you can then add a score for ones that are showing up on the report. All of that can then be aligned back to this final schedule, where you can kind of bring it all together and say, well, did it show up on 1 or 2 or 3? And depending on the severity of this report, you can change. This one might be worth a 0.2, and this one's worth a 0.1. So depending, you can kind of code it. But I think it's useful to see, if you had 10 reports or 20 reports that you ultimately come up with, that you end up using those 20 reports in the scoring in some way. And that this is how I would align it together by utilizing VLOOKUP. Again, once done, it's easy to kind of take this score. I don't have a dollar amount here, but oh no, I do. I have the dollar amount here. We'll give this a try here. Let me just kind of bring this over to here and insert those copied cells. Like we did before with the scatter graph, I can highlight the data. There's only 100 of them, and I can scatter chart that data and look for pockets of activity where there's high score, high dollars. And you can very quickly see some of these vendors that have like a high score and high dollars. And let me just, we also has auditsoftwarevideos.com for free if you want to take a look at a bunch of videos. They're not as updated, I will say, but they're not that old. And we have a lot in ACL, Active Data for Excel, IDEA, and Excel. So definitely look at that. It's all free and kind of broken down for you to watch as well, which is nice. But we do thank you for today. We're about a minute shy of, and I don't see any questions coming in. But we really do thank you for today.